Tech behemoth Amazon was born as an online bookstore. Fast forward 24 years, it now occupies warehouses, grocery stores, and other physical real estate equivalent to 90 Empire State Buildings with a little left over. Jeff Bezos' brainchild has been fast growing for most of its life, but has entered a new phase. Its dominance can't be contained. Amazon has grown so large, it's worth taking stock of why and how it has left corporate America so thoroughly freaked out. Executives at the biggest U.S. companies mentioned Amazon thousands of times during investor calls last year, according to transcripts, more than President Trump, and almost as often as taxes. Joining us now, Bloomberg Gadfly, Shira Ovide, who wrote this piece in the latest issue of Bloomberg Businessweek. Also with us, the CEO of the e-commerce software platform Boomerang Commerce, Guru Hariharan, who is also a former Amazon cloud business leader. So, Shira, I want to start with you. Obviously, we know Amazon is incredibly powerful, but it's also now incredibly complicated, and its power is difficult to comprehend. You also start your piece out by saying Amazon makes no sense. Why?
I mean, look, there are very few companies in the world that are loved by investors and as sprawling as Amazon is, right? If you think about the scope of their operations, they now own a 470-store grocery chain. They have this large Amazon Web Services that does cloud computing. They obviously have an e-commerce operation. They do 1 and 2 hour delivery in many cities. They'll deliver restaurant food. They have a web video service, right? So there are not that many companies that are as sprawling as Amazon is in an era where investors prize focus in public corporations.
So Guru, Shira talks about the fear of being Amazoned. What should businesses be afraid of? What are they afraid of?
Well, there's a lot to be said about all the companies being impacted by, there's so many companies being impacted by Amazon. But one story that not many people have talked about is that of brand manufacturers and consumer packaged goods. Now, these companies are used to selling to retailers through human relationships. And if you think about the companies like Pepsi, Mondelez, General Mills, all these publicly traded companies have to completely rebuild what they have been doing so far, because Amazon doesn't work with the archaic systems that other retailers have been made them used to. They're all, if you're a VP of sales at a large brand, you're going out for dinner with the chief merchant and negotiating a deal. But decisions at Amazon are being made by algorithms. You can't take an algorithm out for dinner. So that's where you have to start thinking about technology and putting the technology underpinnings and rebuilding your entire people, process, and technology stack with sort of having that artificial intelligence technology as the base of the pyramid.
I want to talk about some specific examples. You brought up vacuum cleaners. Dyson, of course, a top vacuum cleaner brand, but I went and searched on Amazon today for a vacuum cleaner, and Dyson was like at the bottom of the page. And that can have a huge impact on sales, right?
Yes, that is a big problem right now because, again, going back to...
Why? So first of all, why is it at the bottom of the page?
Well, so there are lots and lots of parameters that go behind determining what goes in the top or bottom of the search page. And in fact, Amazon search page is about 90% of where the clicks are being generated on Amazon. About 80 to 90% of sales that happen on Amazon are happening on the search page. If you may, this is your modern shelf. This is your modern aisle, the future aisle. And you've got to have your products prominently displayed on this future aisle. And that's not through retailer relationships. That's not by having a dinner. You have to figure out your content, your out of stock, your profitability, your pricing. There's like 15 to 20 parameters that are changing every single second that you have to be on top of. The problem is if you're a Dyson or a Red Bull or a Duracell even. Duracell is another example where they are number one battery seller in the US, but they're not even in the top 3 on Amazon, because you cannot depend on the age-old relationship model. You have to have a technology underpinning in what we do. So it's almost like you have to change your entire process of managing a retailer relationship when it comes to Amazon.
I wonder, Shira, though, should we feel so sorry for these businesses? I mean, obviously, isn't Amazon also an opportunity for these businesses and for businesses that could disrupt the incumbents, essentially?
Yeah, absolutely. And that's totally a fair point that Amazon, I think, for a lot of companies, particularly some small companies, has been a godsend, right? Because In the olden days, if you were a small company, maybe you couldn't afford to get your product in front of people on the shelves at Walmart, but Amazon gives you a much bigger playing field, right? That you can be a small person and sell merchandise on Amazon.com. The tricky thing, of course, as Guri pointed out, that you have to get noticed. And if people are going to Amazon to search and they're clicking for the top results, those top results may not be that small mom and pop in a garage in Denver. It might be a large brand, or it might be one of Amazon's own brands, which I think is part of the disruptive element of Amazon too, right? So Duracell, the big battery seller, it competes on Amazon with Amazon's own brands of batteries, right? And Amazon has the power, if it wants to kind of advantage its own brands above those of brands that are popular elsewhere.
That's a really important point. Guru, your company examines the role of AI and machine learning in dealing with Amazon. What can companies do, and what should they be doing to beat the algorithm, essentially?
Well, it's not really about beating the algorithm, it's about working with the algorithm, right? So first of all, you put the shopper in the center. The customer is the shopper, not the retailer. That's a sea shift in as the way the CPG companies should think about. And then they should deploy machines to work with machines, as opposed to deploying a human to work with machines. And what that means is you're essentially having your team making strategic decisions on where to win on price, where to win on marketing, and where should I invest in stock levels and all of those things. But then really have the machine start doing the tactical decisions on a day-to-day basis. So the technology platforms that we have been building are around that, in helping these brand manufacturers make that transition from going from a very human-intensive retailer relationship to something which is human-guided but machine-driven retailer relationship with Amazon.
So, what is the next phase for businesses? I mean, obviously they're learning, right? But some companies are going to figure it out faster than others.
Yes, absolutely. And in fact, if you look around with the brands that are winning on Amazon, companies like RX Bar, which just got swooped up by Kellogg's for a whopping $600 million when they were doing just double-digit millions in sales, that just proves the point that the entire stack being driven by technology first is so valuable, and it's going to write the fingerprint of the future of retail. So you have to start small, but have a C-level vision. You cannot just have a bolt-on on an e-commerce, on your traditional stack, which is built for store retail, and say, I'm done with e-commerce. No, you can't do that. You have to rethink. The CEO has to be driving the change. You start small. You start with, say, handling Amazon with technology. You empower your sales team with technology-driven, with technology that drives the sales. Then you empower your marketing team to start using Amazon marketing services and start doing automated bidding, as opposed to just punching in numbers or writing above the line marketing dollars or trade dollars. Then you take it to supply chain teams. Supply chain is going to be a big problem for these companies. Traditionally, CPG companies have been fulfilling truckloads or pallets of goods. And now if you order something on Amazon, like say a toilet roll or something like that, you get each one in a box being shipped by Procter & Gamble, right? It's coming from their warehouse. So how do you sort of empower all your teams across your enterprise to drive business through technology as opposed to humans?
Okay, Guru Hariharan, Boomerang Commerce CEO, thank you. Shira Ovide of Bloomberg Gadfly in New York. I'm sure you'll continue to keep us posted on how scared of Amazon businesses should be.